Walt Bettinger is joining me here today. He is the CEO of Schwab, and we are at the Schwab Impact Conference. This is the largest annual gathering of registered independent advisors in the United States. 5,000 people are here, and of course a lot of them are talking about what we have seen in this market and the volatility that we've seen, what impact it's had on their clients and what they're doing as advisors. And Walt, what are they telling you and what is happening here with the clients and what are they doing with their money at Schwab?
Well, first, Sharon, let me just thank CNBC for being at our Impact Conference again. You have such a wonderful footprint here, and we're grateful.
Yeah.
So what's interesting is that over most of the last 6 months, our investor clients, including those working with independent advisors, have been moving money out of the market. Now, largely because they're simply rebalancing back to the portfolio that made sense for them long term. We've not seen any major movements this month as the market has, for the most part, been going down. Almost zero correlation between market movements and activity by clients.
Well, we're talking about $3.6 trillion under management at Schwab, and the registered investment advisors, they have about $1.6 trillion of that money that they're bringing in. Are they telling their clients anything different in light of the volatility that we've seen? In the past, they were saying that the S&P 500 was going to go up over the next 6 months. That's what they said in September. What are they saying today?
Well, I think it just is evidence of how difficult it is to predict the markets. And the wonderful work that advisors do for their clients is build a plan, understand client goals, understand client risk tolerance, and then stay with that plan. And that's why you really don't see big market movements by investors, even though the stock market has its bit of a roller coaster of late.
Rising interest rates have been an area that has benefited many savers. Are your clients reallocating into more conservative products now?
They are. You can see movement into fixed income. We went through a period so long where clients earned almost nothing on their cash or on their fixed income investments. And so it didn't really get the level of attention that it is now. But now you get relatively short-term treasury yields in excess of, for example, dividend yields from the S&P, and that's going to make people reallocate a bit more money toward fixed income.
Savvy investors are really concerned about pricing.
Yes.
And there is a lot of competition out there with firms saying we're going to have no fee on our mutual funds or ETFs, or we're going to have free commission trades. What are you doing? Could Schwab have a fee-free ETF or mutual fund coming out soon?
Well, we could. We're studying that. But I think the real issue that we're trying to understand is consumers' view about the concept of free. What I think we all recognize is that there's nothing free. And so if something is marketed as being free, it's just another way to generate revenue from a client. From a trade standpoint, whether it's lower quality execution than the client might be able to get elsewhere, higher receipt of payment for order flow, there's one way or another that a for-profit firm is being compensated, and consumers are very savvy today. So we're studying it, but we want to be very careful about what we do.
One of the things that your advisors have been studying, and it came out today in the Advisor Outlook study that you have out, they're looking at trade policy, they're looking at tariffs, and they're looking at the impact that that might have. Short term, many of them, the majority of them are saying it's going to have a negative impact. What are you seeing there?
Well, I think what you said is correct. Short-term things like that probably have a negative impact on the markets. But again, for the advisors who are generally working on a long-term time horizon, they're not going to overreact to shorter-term policy actions or even the possibility of a trade war. Those things tend to work themselves out over time. Having a plan, sticking with it is always a better strategy.
The advisors in this study, it was interesting, are all, the majority of them, the median age was in the mid-50s. And they're looking at clients that they've had, many of them, for 15 years or more. But the market has changed, and you know this all too well in the last 10 years. And so has the way that you have to deliver services to your clients. You're doing a lot in the digital space that people who assume Charles Schwab is just, I get to talk to my friend here about my money. It's different, though. How is that changing? How are you changing that?
Yes, it's changing a lot. We've hired hundreds and hundreds of employees into just our 2 digital accelerators in the last year in Austin, Texas, and in San Francisco. I think what the future brings is a combination of great technology, amazing client experience, but it still includes people. Money is highly emotional. It's not like other types of purchases that people make. Money is emotional, and when you talk about emotion, it's important to have someone to be able to be there, ask questions, build trust. Digital efforts, technology will be important, but it's never going to make the people side of money go away.
And the people side might be a chat box, or it might be a chat box or something, but it could be, you're still going to be talking to someone who is taking in the emotional component of your money and understanding how you should deal with that in terms of how you invest your money, right?
I think so. I mean, human beings are still emotional creatures, no matter how intellectual we might get or what technology might do for us. So I think a human being is likely to play a pretty big role for a long time.
And when you look at what investors should be doing now, going forward for 6 months, what are your advisors telling them? What are you as a firm telling clients to do in the light of all that we've seen and in the history that you've had over the last 10 years in dealing with this market?
Yeah, I think the most important thing at a time like this is either to do nothing, stick with your plan, or if things have changed for you personally, update your plan and change your investment approach to reflect that. But don't make changes based on what the market happens to be doing today, tomorrow, last week, or next week. That's a sure losing strategy. The first person that I meet who really knows how to time the market, I'll be surprised. I haven't met him yet.
And you've been doing this a while, so if you don't know, they must not be out there. Walt Bettinger, thank you so much for joining us.